everyone. Welcome to my channel, Budget for Success. Woo! You know what time it is. It's Smart Money Tuesday. Woo woo! It's Smart Money Tuesday. You know this is my favorite time of the week because I get to bring you some nuggets, some information that I've learned over my 20, almost 30 years plus working as a finance director, also sitting on an investment board making decisions for investments upwards of trillions of dollars. And so, information that I've gathered, I've kind of decided I need to share the information, but I want to share it in a way that just anyone that turns on the video can understand it. I want to make it so it's in layman's terms so that we can connect and talk about it. So, today, don't be intimidated. But what is our topic for today, Onyx? We're going to talk about dividends and stock splits. Woo! Yes. How they make a difference. Yes, let's talk about it. Let's give them something to talk about. Let's talk about dividends. Okay, so first and foremost, what is a dividend? So, dividends are a way for shareholders to participate and share in the growth of the underlying business above and beyond the share price's appreciation. So, if you're holding stock in Apple, for example, and the price per share for Apple goes up, okay, well, the value of your investment has just gone up. But there's another piece that you could also share in the profits, and that's when Apple decides to pay dividends. Those dividends can be reinvested or you can receive those dividends. So, my next point is most dividends are cash dividends and they're made on a per share basis to investors. So, obviously, the more shares you have, the more your dividends will equate to. And those dividends can be reinvested to buy more shares. So even if you only invested a certain amount of money when you first bought stock and you did nothing else, if it paid dividends, your shares or your numbers of stocks are going to increase. Now, companies pay dividends when money is left over after covering all of their operating expenses and any business reinvestments. So basically, this is money that they give to the shareholders to entice them and encourage them to invest more in stock because a lot of investors, they look for dividends that pay. I mean, they look for stocks that pay dividends on a regular basis. Those are very appealing to investors. So companies can entice investors by offering dividends on a regular basis. So let's see dividends at work. So what I did was I pulled some old statements that I have from many years ago. These are accounts that I no longer have because I now have a financial advisor, but I want to share with you how I managed and received those dividends and what did it equate to. So let me share my screen. Now, are we going to get stinking rich off of dividends? No, but dividends are dividends. That is money, okay? That's money, honey. So this is a year-end statement that I received. This was in 2021, and this is from Morgan Stanley, which is really E-Trade, okay? And so at the year end, they have to submit a 1099 statement to say this is all the interest that this investor has earned. And so when you go scroll down, here's the consolidated interest. So total interest, ordinary dividends was $75.34. And then how much was qualified? $73.19. And then there was some Section 199A dividends at $1.06. So $1.06. Okay. So wow, $75. You go, Onyx, that's not a lot of money. No, but it was free money. Okay. Free money. Free money that I received. Okay, so I just wanted to show you this page so you could see the type of stocks that I was invested in and the dividends that was paid out. So we have Apple, Microsoft, Pfizer, Schwab, All of these all paid out dividends. And then we had SPDR Trust, Select Sector Trust. So this was a kind of like a balanced portfolio of stocks that I had all together. E-Trade, you can opt in to select certain stocks individually, or you could also allow E-Trade to select a balanced portfolio for you. And all you do is invest a certain amount of money every month, and then they take your money and they put it into these different um, mutual funds, ETFs, etc. And so we have some dividends that were paid on those amounts as well. And so when you scroll down to the next page, this was Viatris and Schwab. At the end of the day, I received $75.34 in dividends. Now, I liked E-Trade. E-Trade is a good platform to invest in. You can do it on your own. You don't have to have a financial advisor. The only thing you should be aware of is you have to buy the whole share. So, like if you wanted to buy um, Google, for example, and if Google's $3,000 a share, like you have to have $3,000 to buy a share of Google versus a platform like Robinhood, which is my other statement here. This is from 2022. Robinhood, you could invest in partial shares. And so now, listen, I want to be real clear. The money that I have invested in these stocks, because they're stocks, they could go up and could go down. This money is not money I'm trying to pay the mortgage with. These are not money I'm not trying to pay the bills with. Okay. I don't want to be deceiving, right? This is just my example. I am not giving you any stock advice. This is what I was investing in. And I did this to the point where I had received so much money that I wanted to then have an investment advisor to manage my portfolio. And so I switched over to an investment advisor. But again, this was money that I knew could go up or down. It could be uh, it could be a huge win or it could be a huge loss. And I understood that. So this was not money that I needed to pay bills with. Okay. This was money that was for long-term investing. So in this scenario, this particular month, I actually had some money in cash. I had not moved it into stocks yet. And so at the beginning of the month, the investment portfolio was worth 11,000, and at the end of the month, it was worth 12,700. You'll also notice that there was no more brokerage cash. It was all sitting in securities, and then there was some sweep money, and that money just sweeps and it goes in and out. And so basically, what I did throughout the month was purchase stocks so that I could have all the money invested. And in that period, I earned $18 in dividends and interest earned of $1.10. And so year to date, there was $40.45 in dividends. Again, these aren't large amounts, but this is free money. This is money that all I had to do was invest and get it and receive it. So which stocks were paying? Again, we have Apple was paying a dividend. Apple's good at paying dividends. Bitwise, which was an ETF for cryptocurrency. Berkshire Hathaway, no dividends paid. Um, and then we had Dish Network. This was a stock my dad said invest in, and it didn't turn out. It didn't pan out. That's why I said do not put your mortgage money or your bill money into stocks because some don't always pan out. Google did well, but Google did not pay dividends. This one, I believe I shared this with you before. iShares Trust. These are 5 to 10-year investment grade corporate bonds. Corporate bonds. You're not going to usually make a whole lot of money. The estimated yield is 2.45%, right? So you're not going to make a whole lot of money. But look at that. Dividends, $43.23. Nice dividends. Invesco, I also received dividend money on Invesco. QQQ, that's an ETF, $5.61. Riot Blockchain, fairly new to the equation, I think. So the reason I looked into blockchain was because I understood that that was the technology behind crypto. And so I just wanted to get involved with the technology piece of it. So that's why I invested in that particular um, stock. And then Starbucks paid, look at those dividends, $60.88 in dividends. So that was a good um, payout. And then S&P 500 ETF had a payout of $22.85. And Visa had $4.87 payout. So we go down here and there is the total market value of my portfolio at that time. And then the total estimated dividend yield was $144.18. So anyway, this is just to show you that you can not just make money because your stock value goes up, but you can also make money if you pick stocks that pay out in dividends. So it's a very, cool way of making passive income. That's where we're at, guys, is making passive income. Now, if you need help because you get a statement from retirement or you have investments in stocks and things, and you just want to understand your statements, hey, send me an email. I offer 30 minutes of free wealth coaching. Or if you want to get onto a program and get started in really changing and transforming the way you do business, the way you invest, the way you save, the way you budget, then look me up and we can do some wealth coaching on a monthly basis and make some real headway in building wealth. All right, so now let's talk about what is a stock split. So when a company increases the number of outstanding shares to intentionally lower the price of a single share, making the stock more affordable without losing value. So this is, I got involved with stock splits when Amazon did a stock split because I held shares of Amazon and Amazon's stock price had gotten up to like $3,000 a share. It was crazy. And so Amazon did a stock split, and I benefited from that because then I received extra shares. So it says here, although the number of shares outstanding increases, the price of each share will split as well. So at the end of the day, you have more shares, but the value is no longer, like for Amazon, was no longer worth $3,000 a share. I think it went down to like $200 a share. And obviously, what would be beneficial is you do a stock split. Now you have three times the amount of shares. And then hopefully, gradually, as time goes on, the price per share gets back up to $3,000 per share. So it's now like you got three times the number of shares, but it's valued at $3,000 a share. Woo, it's a win. So the most common split ratios are 2-for-1 or 3-for-1, which means for every share held before the split, each shareholder will have 2 or 3 shares respectively after the split. So like I said, it's a long-term benefit. You don't win anything initially during the stock split, but over time, you now have more shares to work with. So I did a little scenario. This is Joe's ice cream company. This is like a totally fake scenario, but I just wanted to really show you how dividends work and how stock splits work all in one example. Okay. So for all you gurus out there, this is just for illustration purposes only. So let's say year one, we invest $100 per share and we purchase 10 shares of Joe's ice cream. So our total investment value is $1,000. We put $1,000 in, and at the year end, you get a dividend of 10% payout. So that's really $1 per share. Well, we own 10 shares, so we're going to get $10. So our new investment value is now $1,010 at the end of year one. So 5 years later, and look, the value of the share has increased. It is now $200 per share. Again, this is a hypothetical scenario for Joe's ice cream. But we have 10 shares. So now our investment value is $2,000. Plus, now when we get the 10% dividend payout, it's $2 per share. So now our total dividend is $20. So our new investment value is $2,020. So we started out with $1,000 investment and we held on to it for 5 years. And now the portfolio is worth $2,020. Passive income. The dividends were reinvested. We didn't take the money out. We just put the money back in and let it ride. Let it ride. Okay, now year 10 comes along, and there were three stock splits. Now, we started out with stock split number one. We had 20 shares. So we went from 10 shares to 20 shares. And then stock split number two, this is 10 years in, guys. So after 10 years, you can start seeing stocks do stock splits, quite frequently over a 10-year period. When I say frequently, I don't mean like every year, but you could actually see three stock splits over a 10-year period, depending on what stock you're talking about. But anyway, so you went from owning 10 shares to now owning 20 to then 40. And then finally, the third stock split, you now own 80 shares. And the value of the shares are $150 per share. So your total investment value is now worth $12,000. Same dividend payout, 10% at $1.50 per share. So you get a total dividend payout of $120. So 10 years in, your $1,000 is now worth $12,120. And so what is your profit? $1,120. So an increase of 1,112% increase. So this is a stock that did well, that stayed around and progressively grew over a 10-year period. Of course, you got to figure out what stock that is that's going to progressively grow. And you can't always base it on historical wins because you say Amazon's won a lot over the last 30 years. But is that same growth going to continue for the next 30 years? Who knows? That's the thing. You don't know. So you could stand to win a whole lot of money, or you could stand to lose as well, because this company could go out of business. But I wanted to just show to you how stock splits and dividends can benefit your portfolio, barring that you are in the right investments. Okay. So this was just education for you, right? This was just education. You need to go see a financial advisor and get some advice as far as what is the right investment for you and how do you build a balanced portfolio. And you also want to make sure that they create a portfolio that matches your risk tolerance and matches your need for the money. If you're going to need the money within a year, then you want to be more conservative versus needing the money 10 years out. That's what my investment advisor has done for us. We have a balanced portfolio. We have some money that's aggressive. We have some money that's more conservative. We have some money that's in international funds, some money that's in bonds, corporate bonds, municipal bonds. I mean, we've just got a whole hodgepodge of investments. And that's what a financial advisor will help you with. But until you get to that point, I want to help you along the way. So if you have things that you want me to look at or review or give you some feedback on, definitely reach out to me. Let's get this wealth coaching going. Let's build wealth for not just us, but for our family and our generations to come. Thanks for hanging out with me. I hope I made it somewhat interesting to where you feel like knowledge is power, like you feel more powerful now that you have this information, because that's what it's all about. Knowledge is power. All right, guys. I love and appreciate you. Thank you so much for supporting my channels. And hey, I have a giveaway going on. So you definitely want to go check out my video. It has a little Hello Kitty on the front. Check out my video. I'm so excited for the so many people that said yes, they wanted to get this binder to help them save $12,000. Like that's big goals, big time goals. And I'm excited for whoever wins. But I also have another prize I'm going to give away. So I'm going to be giving away another binder. It won't be Hello Kitty. But it will have savings challenges. It will come with savings challenges, so it will help you save a lot of money. And it will even come with some cash to start you on your savings journey. So now I'm giving two binders away. Yes, whoop, whoop, two binders. Okay, so we have a Hello Kitty binder, and the second binder is a Fred Flintstone binder. All right, so make sure you go to that video, you watch it, and you put a comment and you say Hello Kitty in the comments. Because when I do the drawing, I'm going to be pulling two names now, not just one. And hey, I might pull three names and throw in another prize, but you got to stay tuned to see what that third prize is. I love you and appreciate you. Thank you for supporting my channel. Thank you for coming back and joining in to Smart Money Tuesday. The only thing I ask, this is free information. The only thing that I ask is that you share this information with others. It's free, and you never know what may motivate and inspire them to start on their journey. You never know what words that'll be said that will make a snap and they just change their whole financial outlook. So share it with them. Tell them to take a listen to it. And then hopefully they listen to some of the other Smart Money Tuesdays videos that I have out there, and they get excited and get pumped and get motivated about building wealth, because that's what this is all about. So if you want more Smart Money Tuesday, be sure to like, comment, and subscribe to Budget for Success. Bye for now. Love you guys.